First news. Headline: US-Iran peace deal triggers crude crash, eases inflation fears, and lifts India macro outlook. Global markets were jolted as the US and Iran moved toward a peace framework, reopening key supply routes and triggering a sharp fall in crude oil prices. Brent slipped toward multi-month lows, and that immediately changed the inflation narrative for India. Lower crude means lower import bills, softer fuel prices, and a direct relief for India's current account deficit. Bond markets responded strongly with a rally as yields softened, while foreign investors rotated into Indian debt on improved macro stability. For equities, this is broadly positive for oil importers like paints, aviation, logistics, and even banking, as inflation expectations cool. But traders warn, if oil stays low too long, global growth concerns may surface. For tomorrow's trade, crude stability will remain the biggest driver for risk sentiment across Asia.
Second news. Headline: Fed hawkish stance strengthens dollar. IT stocks under pressure as global rate fears rise. The U.S. Federal Reserve shocked markets with a hawkish tone, signaling higher rates for longer, and that instantly pushed the dollar index to multi-month highs. This created pressure on emerging markets, and India was no exception. IT stocks like TCS, Infosys, and Wipro saw sharp selling as investors fear slower U.S. tech spending combined with currency volatility. At the same time, gold and silver corrected as higher rates reduced safe haven appeal. The ripple effect is clear: stronger dollar, weaker tech sentiment, and cautious global risk appetite. If U.S. yields stay elevated, FIIs may continue to rotate out of high valuation tech. Tomorrow, all eyes remain on Fed commentary and U.S. data for direction.
Third news. Headline: Nifty holds above 24,000 as bulls defend key levels. 24,200 breakout in focus. Indian markets managed to hold firm above the psychological 24,000 mark on the Nifty despite global volatility. Index strength was supported by selective buying in defense, FMCG, and midcaps, even as IT dragged. Analysts say 23,800 remains a strong support zone, making dips attractive for accumulation. On the upside, 24,200 is the immediate breakout level, with potential extension toward 24,400 to 24,600 if momentum continues. Broader market breadth remains surprisingly resilient, showing underlying liquidity strength. Traders, however, remain cautious ahead of global cues and crude volatility. The next session could be decisive if Nifty sustains above 24,200.
Fourth news. Headline: Defense stocks surge on record 1.78 lakh crore production outlook. Sector rally accelerates. Defense stocks witnessed strong momentum after the government projected record production of 1.78 lakh crore for FY26, a massive policy-driven boost. This represents over 15% annual growth, signaling long-term structural demand and continued indigenization push. Stocks across the defense basket and the Nifty Defense Index surged nearly 23% year-to-date, outperforming broader markets. Investors are betting on sustained order inflows, export opportunities, and margin expansion for key players. However, analysts caution that valuations in select names are running ahead of fundamentals in the short term. Still, the long-term growth story remains intact. Defense remains one of the strongest momentum sectors heading into the next trading sessions.
Fifth news. Headline: IPO flood ahead. 26 billion rupee lock-in expiry threatens supply pressure in markets. A massive supply overhang is building in Indian equities as nearly 71 listed companies see IPO lock-in expiries, unlocking around 26 billion rupee worth of shares. This creates potential near-term selling pressure, especially in recently listed midcaps and fintech names. At the same time, new IPOs like Turtlemint and Avian's Biomedicals are entering the market with strong gray market premiums, showing aggressive retail interest. But analysts warn that too many listings combined with unlocking supply can cap upside momentum. Liquidity rotation will become critical in the coming weeks. Selective stock picking is now more important than ever. Expect volatility in IPO-heavy counters.
Sixth news. Headline: Bajaj Auto buyback, Vedanta demerger, and Reddington AI-led rally drive stock-specific action. Corporate action thus dominated stock-specific trading as Bajaj Auto announced a massive 5,600 crore buyback, triggering strong investor interest. The buyback price offers a steep premium, signaling management confidence. Meanwhile, Vedanta Group stocks remain volatile post-demerger, with aluminum and oil and gas under pressure, while power shows relative strength. Reddington surged over 10% after Apple CEO hinted at possible price hikes driven by AI chip shortages, boosting distributor margin expectations. These idiosyncratic moves highlight how company-specific triggers are now driving alpha in a range-bound market. Traders are advised to track corporate actions closely for short-term opportunities. Stock pickers market continues.
7th News. Headline: IT sector under pressure as U.S. demand fears and currency headwinds hit sentiment. The IT sector faced broad-based selling, with TCS, Infosys, Wipro, and Tech Mahindra all under pressure. The trigger is a combination of weak U.S. demand outlook, Fed-driven dollar strength, and cautious tech spending globally. Even though rupee volatility often supports IT margins, current sentiment is dominated by demand concerns rather than currency benefits. Investors are rotating out of defensives into cyclicals and defense stocks, intensifying sector divergence. Technical indicators suggest continued weakness unless global cues stabilize. Any bounce may face selling pressure unless earnings guidance improves. IT remains the weakest major sector in the short term.
8th News. Headline: Rupee strength and bond rally signal improving India macro stability. The Indian rupee extended its winning streak, hitting multi-week highs supported by strong exporter inflows and lower crude oil prices. At the same time, Indian government bonds continued their rally, reflecting improving inflation expectations and foreign investor participation. Lower oil is acting as a dual booster, supporting currency stability and easing fiscal pressure. RBI's preference for domestic settlement in bond markets is also improving liquidity and price discovery. This macro stability is quietly strengthening India's long-term investment appeal. Currency and bond markets are now aligned with equity optimism.
9th News. Headline: Auto and consumer inflation concerns rise as companies pass on cost pressures. Inflation is re-emerging in specific pockets as companies begin passing on higher input costs to consumers. Kia announced price hikes across models, citing rising operational expenses, while food inflation pressures are visible in vegetables like tomatoes and potatoes. Even urban India is seeing stress, with water tanker prices in Mumbai surging sharply due to supply constraints and delayed monsoon. These micro-inflation trends could offset some benefits from lower crude oil. Markets are watching whether RBI maintains its neutral stance amid mixed inflation signals. Consumer demand sensitivity will be key in coming quarters. 10th News. Headline: Global risk mix intensifies as Bitcoin struggles, gold volatile, and U.S. tech capital flows dominate. Global markets are showing mixed signals as Bitcoin struggles near key support levels despite earlier risk-on sentiment. Gold and silver remain volatile, swinging between safe haven demand and rate hike pressure from the Federal Reserve. Meanwhile, U.S. tech continues to attract global capital, especially in AI-linked names, pulling liquidity away from emerging markets. SpaceX stock volatility after its debut adds to uncertainty in private market valuations. This reflects a broader theme: capital concentration in U.S. AI trades versus fragmented global risk appetite. For Indian markets, this means intermittent volatility despite strong domestic macro support.